Hello and welcome to the look ahead for Wednesday, the 16th of April, with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight, we'll be watching out for Chinese data for GDP, retail sales and industrial production coming through in the European session, UK CPI, followed by US retail sales, and Federal Reserve Chair Jerome Powell will also speak, and the Bank of Canada's interest rate decision. So just kicking off with the UK inflation data, UK inflation is expected to ease to 2.7%, down from 2.8% year on year in March. This comes after we had data today from the UK jobs data showing that the unemployment rate remained unchanged at 4.4%, but wage growth is still sticky. Wage growth remains strong at 5.9%, excluding bonuses, and 5.6% including bonuses, which, given the sticky rate of inflation, will make it quite difficult for the Bank of England to cut interest rates, given that high wage growth is intrinsically linked to service sector inflation, which has been particularly sticky around the 5% area. However, it's also worth noting that this jobs report came in today as the UK companies are facing higher costs as far as staffing is concerned, with the start of the employers' increase in national insurance contributions, as well as a rise in the minimum wage. However, expectations are, because we are looking at a slowdown as well here in the UK, particularly with Trump's trade tariffs do cause that global growth slowdown that we are expecting, then growth is expected to take a hit, which could mean that the slower pace of growth and the lower rate of hiring in the UK will mean that wage growth will slow. Anyway, as far as the Bank of England is concerned, they are looking to, the market's pricing in a 90% probability of a rate cut in May, on May the 8th, when they meet again. That will mark the let's have a look at the chart. That will, so there's a 90% probability that the Bank of England will cut interest rates by 25 basis points at that meeting. Obviously, we've got inflation data tomorrow. If we get hotter than expected inflation, we could find that the expectations for Bank of England interest rate cuts actually fall, which could boost the pound. Now, the pound has had an incredible rally against the US dollar. Here we can see how it rallied from this low of 127.40 just last week. Just 10 days ago, to a sort of 6-month high at the 132.50 level, which is pretty much where it's trading as we speak. So we can see that we're just testing that resistance there. As I said, slightly hotter than expected inflation could be enough to break that through. The US dollar remains weak still, as given the concerns over the outlook for the economy with Trump's trade tariffs, although there is a huge amount of uncertainty there as far as that's concerned. As I said, we've got US retail sales tomorrow. We've also got Federal Reserve Chair Jerome Powell speaking. So obviously the US dollar performance will also be in focus here. If we hear more calming words from Powell, then that could give the US dollar a boost. Just having a quick look then at the NASDAQ, we are seeing a slightly calmer mood in the market following these really elevated levels of volatility in recent weeks. We recovered from that low down there at the 16,325 level. Still haven't made it above the 19,000. That's what we need, is a rise above 19,000, sort of 19,250, in order to get a higher high and a more stabilized outlook for this pair, and that would negate the near-term sell-off. So I think a lot of this depends on what Powell's going to be saying. Then finally, we've got the Bank of Canada. Bank of Canada not expected to be cutting rates tomorrow. I think they'll go for a pause just so they can have a sense of what's going on with these trade tariffs. Obviously, Trump's walking back tariffs and the latest developments potentially on autos, on cars. That will obviously be good news for Canada. This is the loonie has strengthened considerably against that weaker US dollar. We're just finding some support here around the 138.50 level. We're down below the 200 SMA. The RSI supports further losses whilst it remains out of oversold territory. So if we can get a break below that 138.50, then that really could open the open the door to the 134.60 level, which is more or less what we saw down here in late August and September. If we're signing that the Bank of Canada do sound actually more dovish and very concerned about the outlook for the Canadian economy, which there would be reason to if the tariffs were going ahead as they were initially planned, but it does feel that we're getting perhaps a softer stance from Trump. But any recovery in the US dollar, watch out for this level here. That's the 140 level. That's the 200 SMA, also a round number. If we get above that, it's going to bring the 141.80 level back into focus. So that's everything for me. I hope you've enjoyed what you have. If you have, then please do like this video. Otherwise, I'll see you tomorrow for more.